If you want to generate passive income, build wealth, and retire a millionaire, it is vital that you learn how to invest in the stock market. Because if you understand how to invest in the stock market, money will be your servant. But if you don't understand how to invest in the stock market, you will be money's servant. And so in this video, I'm going to walk you through everything a beginner needs to know about investing in the stock market, starting with the basics of why do you need to invest, all the way to a live example of buying stocks and everything in between, as well as finish the video talking about why people lose money in the stock market. Every section of this video is timestamped below in case you need to go back, but to not waste any time, let's start with the basics. Why do you need to invest in the stock market? Alright, so before we talk about how to invest, I find it extremely important to talk about why you need to invest. And there are two big reasons why you should invest. The first reason is you cannot save your way to wealth. Saving your money is good and important, but you cannot become wealthy by saving money. You become wealthy by investing. For example, let's say that you want to reach a net worth of $1 million. If you saved $300 a month, it would take you 277 years. But if you invested $300 a month, it would only take you about 35 years. And that's because when you put your money in a savings account, increasing that amount is active, meaning earning more is directly tied to your labor, and it grows linearly. However, when instead you invest your money, increasing that amount is passive, meaning your money is making you money, and it grows exponentially. And so you need to invest because investing is how you become wealthy, not saving. Now, the second reason is to combat inflation. You see, due to something called inflation, the value of the dollar decreases by about 2% every single year. And so over time, everything becomes a little bit more expensive. For example, in 1967, a Big Mac cost 65 cents, but in 2024, a Big Mac now costs $5.69. And so you need to invest to combat this inflation, because if you keep all your money in a savings account with a low interest rate, each year your money will be worth less and less. But if you have your money invested, on average you will receive a 10% return, which will cover the 2% inflation plus more to grow. And those are the two reasons why you need to invest. So now let's talk about what is the stock market. Now, many people think that the stock market is extremely complex, but it's actually extremely simple to understand, and this is basically how it works. A company like Amazon wants to grow, and so they need to raise money. So they will go to the stock market and allow the public to become an owner of their company by buying shares or stocks. And a share is basically a unit of ownership over a company, which is represented by a ticker symbol. And so anybody with a brokerage account can go to the stock market and purchase shares of the company to become an owner. And so when you buy a stock like Amazon, just like Mr. Bezos, you are an owner of the company, and Amazon will use the money you invested to try to grow and make more money. And if you invest in good companies, the value of your stock will increase. For example, if you bought $1,000 of Amazon stock in 2007, today your investment would be worth over $100,000. And so to put it in the most simple terms, the stock market is a place that companies go to raise money and investors go to grow money. And a stock is simply a unit of ownership over a company. And so now that we understand the basics of the stock market, let's now talk about opening a brokerage account. So now that we understand why we need to invest and what the stock market is, you're probably asking yourself, how do I purchase stocks? Well, luckily purchasing stocks has gotten incredibly easy over the years because it's all digital. All you need is to open something called a brokerage account, which is basically an investment account. And there are different types of brokerage accounts, like retirement accounts and non-retirement accounts. And the difference between these accounts is how they're taxed. And ideally, you should have all of these accounts. But to open a brokerage account, all you need to do is choose a broker and open an account. And the big brokers are Charles Schwab, Vanguard, and Fidelity. And the smaller, more day trading apps are Robinhood, Webull, and Moomoo. And this is just my opinion, but I would consider choosing to go with these big brokers because you'll get better customer service, more research tools, and less gamification. But that's all you need to do. Just go to the website and open up a brokerage account. And once you have a brokerage account, you can begin investing in the stock market. And so now let's talk about what should you invest in? Now, when it comes to the stock market, stocks are just one thing that you can buy. You can also buy bonds, mutual funds, ETFs, index funds, CDs, options, REITs. There are so many things in the stock market that you could buy that it can get overwhelming. However, the truth is, the only investment that you should probably buy is this one, index funds. In fact, Warren Buffett, one of the greatest investors of all time, called index funds his favorite investment. And index funds are very simple to understand. For example, when you buy a stock, you're buying a single company, and the performance is determined by that single company. Whereas when you buy an index fund, you are buying a diverse portfolio of hundreds of stocks, and the performance is determined by hundreds of companies. And the reason you should buy index funds over stocks is because picking winning stocks is extremely hard. And although there are big winners like Tesla, there are more losers. And even the smartest investors in the world have trouble picking winning stocks, whereas index funds are less risky because it's a diverse portfolio. And although some companies will be losers, many companies will be winners, and it will be an average of the portfolio, historically a 10% return. And so let's say that you invested $10,000 in index funds. 40 years later, it would grow to $492,000. Now, no matter what investment you choose, there's always going to be a risk involved, but your chances of making money in the stock market are higher when you invest in index funds. Because over the last 100 years, even with recessions, the market has always gone up, whereas stocks don't always go up. And in this video, which I'll link up here as well as in the description, I go in a much deeper dive on index funds. So give that one a watch after you watch this video. But I am not a financial advisor and I cannot give financial advice. But in my opinion, you should probably consider choosing to invest in index funds because over the long term, they have proven to make money and help build your wealth. So once you choose what you want to invest in, now let me show you a live example of buying a stock. Alright, so purchasing stocks in the stock market is actually incredibly easy, and I'm going to walk you through how you do it through my broker, Charles Schwab. Alright, now depending on which brokerage you choose, the interface will look different, but this is how you buy things on the stock market with Charles Schwab. At the top here, you will click Trade, then go to All-in-One Trade Ticket, which will lead you to this screen. Next, I will choose the brokerage account I want to invest in, which I'm going to buy things with my Roth IRA. And as you see here, I have $500. I moved $500 in the account. Now right here, I will put in the ticker symbol for whatever I want to buy. And in the stock market, investments are identified with ticker symbols, like Apple is AAPL, Tesla is TSLA, or the Vanguard Total Stock Market Index is VTSAX. Alright, so as I mentioned in this video, I choose to invest in index funds. So I'm going to enter the index fund I buy, which is SWPPX, which is the Charles Schwab S&P 500 index fund. And then I will select action, click buy, put in $500. That's how much money I'm going to invest. Review order, and then place order. And then right here I have my receipt. And it's really as simple as that. Once you click the buy button, you are now an investor in the stock market and your money is off working very hard to make you more money in a passive way. And that is how you invest in the stock market. So the final thing that I want to talk about to make you all a little bit more comfortable with investing is, why do people lose money in the stock market? Now, many people refuse to invest in the stock market because they think the stock market is too risky, and they heard their Uncle Jim Bob lost $100,000 in the market. But the truth is, there are reasons why people lose money in the stock market, and I want to talk about 3 of those reasons. The first reason is trying to outperform the market. Now, as I said earlier, the market returns an average of 10% a year. And some people will look at that and say, I can get a higher return, and decide to invest in various stocks that underperform or even lose money. Let's face the facts, ladies and gentlemen. The reason that your Uncle Jim Bob lost $100,000 in the market is because he was in his mom's basement drinking Mountain Dew Code Red, day trading AMC and GameStop on margin, and lost all of his money. Uncle Jim Bob lost $100,000 not because he was investing in index funds, but because he was being a dumbass. You can't outperform the market, and if you try, the market will humble you. Now, the second reason people lose money is panic selling. Now, another common reason that people lose money in the stock market is because for a long time the market is doing good and going up, and all of a sudden there is a crash, and they think the sky is falling and decide to sell their investments at a loss and lose money. It's important to understand that when you buy something in the market, like an index fund, you do not have money anymore, but you have shares. And even if the market crashes and your portfolio loses value, you still have the same amount of shares. And if you hold, your portfolio will recover. You only lose money if you sell. And as long as you don't panic when times are bad and hold on until times are good, your investment will eventually recover. Now, the third reason is being impatient. Now, many people will start investing, maybe buy an index fund, and 3 months later they see no return. Then they get impatient and want to see quicker results and choose to invest in individual stocks that end up losing money. The truth about investing in the stock market is that you will not see a substantial return for a very long time. Building wealth doesn't happen in a period of months or years, but in a period of decades. And if you want to make money in the market, you must be patient. You must understand that you most likely won't reap benefits until old age. However, it's important to know that the point of investing is not just to make a bunch of money really quickly so you can live large, but it's so you have a level of financial security protecting you in case something happens in the present or in the far future. And those are the common reasons that people lose money in the stock market, and that is how you invest in the stock market. I hope this video helped. Let me know in the comments. But with that, muchas gracias. Que tengan un buen día. Nos vemos, chicos.